What's going on, and welcome back to another episode of the Mortgage Mindset. I'm your host, Trevor Otsuka. I am a licensed mortgage advisor with Barrett Financial Group, and I lend on commercial, residential, and private money for fix and flip. Today, we're rocking a solo show. Time of this recording, it is Saturday, April 5th, and when you guys watch this, it'll be Monday, April 7th. We're going to dive right into the market update. So as of market close on Friday, this is what we're looking at for the 30-year fixed conventional. You're at a 6.60% national average. 15-year fixed is at 6.02. 30-year jumbo, we are at 6.75%. 30-year FHA at 6.03. And then 30-year VA at 6.05 respectively. So the market is definitely improving. A lot of it has to do with tariff headlines and a whole bunch of other stuff. So let's talk about market data from this week. Tuesday, April 1st, you had ISM manufacturing PMI for March, came in under expectations, which is great. You also had USA JOLTS job openings on that same day for the month of February. You had ISM manufacturing prices paid for March, also on that same day. And then Trump announced his reciprocal tariff plan. That was on Wednesday, April 2nd. Thursday, we had S&P Global Services PMI. And we also had ISM non-manufacturing PMI for the month of March, which came in under. And then on Friday, April 4th, you had non-farm payroll jobs report for the month of March. Came in a little hot. There were some extra jobs that were created, but the unemployment rate actually increased by 0.1%. So we actually had a decent day to open on the market on Friday. And then as the market continued to progress throughout the day, it just slowly deteriorated. And we ended up back pretty much at even to end the day. If you look at a 5-day chart, I'll throw this on the screen for you guys too. We had a really nice improvement all through the week, and then Friday kind of went back down to around Thursday's levels. Yeah, Thursday's levels. So really no change from Thursday into Friday in the grand scheme of things. So we'll see what's going to happen moving into next week. Next week's econ calendar data, you have FOMC minutes that's going to happen on Wednesday. Thursday is the biggest day of the week. You have month-over-month core CPI for March and year-over-year core CPI as well. And then core producer prices year-over-year and month-over-month on Friday, April 11th. So jumping into today's news article headline, this one caught my eye. It was written by Logan Matashani. This is on Housing Wire. It says, lower mortgage rates are spurring housing demand. Okay, we did see, as we just showed you, that there was a little bit of market improvement for residential interest rates. So it's definitely going to increase the number of mortgage applications that we're receiving as an industry in overall. So here we're going to go, diving right in. Point number one, mortgage rates and increased buyer activity. Mortgage rates recently hit a year-to-date low, significantly boosting housing demand. Purchase applications increased by 9% year over year, signaling heightened buyer interest. So to take advantage of this favorable rate environment, buyers who have been waiting on the sidelines might now find the affordability that they need to get back into the market. Point number two, inventory levels rising, offering more options for buyers. Housing inventory grew notably last week from 675,500 up to 691,197 active listings. New listings also saw significant year-over-year growth. Increased inventory means more options for buyers and potentially less aggressive competition, making this an ideal time to reconnect with clients and discuss opportunities. Point number three here is potential market volatility from tariffs and economic factors. The recent tariffs have caused volatility in mortgage rates and the broader economy. Goldman Sachs predicts the Fed may further cut rates amid growing recession concerns. Stay informed and closely connected with your agent and your lender. Market conditions can shift quickly, and this volatility could present brief windows of opportunity. So that's what you got going on. You have the tariff war that's pretty much going on, and then Papa Trump announced the global tariffs. I think I was on the 2nd on Wednesday. And, obviously, if you guys watch the stock market, there was a couple $1 trillion that were lost in the stock market because of market deterioration. So who knows what exactly is going to happen, what the long game play is going to be, and then how we are going to recover. Usually, historically speaking, when you look at the stock market, whenever the market dips below where it was previously, just give it time. It'll always bounce back and then exceed the point it was before the dip. So How long that's going to take to materialize, no idea. So we're gonna see, keep monitoring what's going on with the whole tariff situation, and yeah, I'm curious to see what's going to happen with rates this year. Is the administration artificially forcing the Fed to lower interest rates, and then what is that going to do for recession concerns? So who knows? We're going to see. Let me know in comments below what you guys think. Otherwise, we're going to see you guys next week. I hope you have a blessed week. Crush it. Go kill it. We'll see you guys later.